All right, let's dive right into this explainer and build a professional day trader's playbook for finding real momentum in a highly volatile, fast-moving market. You know the feeling, right? You wake up, check the morning feeds, and everything's flashing with global conflicts and wildly swinging commodities. It can honestly feel a bit overwhelming trying to find your next execution. But if you know how to read the data, that kind of chaos is exactly where the absolute best opportunities are hiding. Today, we're going to cut through all that noise and figure out how to evaluate true momentum. We're breaking this down into 5 quick steps today. 1. The risk-on market shift. 2. Defining true stock momentum. 3. A case study on Reddit Inc. 4. Volume and earnings revisions. And 5. Momentum traps and warnings.
Okay, let's jump straight into Section 1, the risk-on market shift, reacting to the morning macro scan.
Before you even think about looking at a single stock ticker, you've got to understand the broader macro environment. Seeing WTI crude oil prices dip down to $103.33 a barrel recently, totally averting that nightmare $125 scenario economists were sweating over, completely shifts the market's entire risk profile.
And this is a brilliant example of how easing global energy supply fears totally shift broader market sentiment. We're looking at easing U.S.-Iran geopolitical tensions and paused operations in the Strait of Hormuz. That chain of events directly leads to reduced risk premiums across equities and triggers a rapid shift to a broader risk-on market sentiment. For us as active traders, that's the ultimate green light to start hunting for momentum stocks.
Kelvin Wong, a senior market analyst over at AMD, summed this up perfectly in a recent report. He noted that cooling U.S.-Iran tensions and lower oil prices have reduced risk premiums, lifting global equities to record highs. Because, think about it, when the immediate threat of energy-driven inflation recedes, capital just flows right back into equities, creating literally the perfect environment to execute your momentum trades.
Moving right along to Section 2, defining true stock momentum, building the trader's playbook. Now that the macro environment is signaling a risk-on rally, we need to know exactly what we're looking for in an individual stock. Here's the deal. True momentum isn't just about catching a lucky one-off spike. Momentum investing is about following a stock's recent trend, buying high to sell even higher, based on the solid premise that an established course is highly likely to continue. It's about finding a reliable path you can confidently ride.
To separate that true momentum from the daily market noise, your trading plan should follow 3 straightforward, actionable steps. First, check short-term price action against industry averages. Second, confirm that bullish trend using average daily volume. And third, review upward earnings estimate revisions.
Let's look at Section 3, Case Study, Reddit Inc. We're going to apply this playbook directly to the RDDT ticker. Check out how cleanly Reddit's stellar short-term price performance stacks up against its broader industry growth trends. Over just a one-week time frame, Reddit shares were up 7.48%. That absolutely crushes the Zacks Internet Software Industry average of 1.78%. Stretch that out to a one-month time frame, and Reddit gained 22.21% compared to the industry's 5.50%.
And if we zoom out, the longer-term perspective tells the exact same story. Reddit boasts a one-year gain of 45.34%, massively outpacing the broader S&P 500's gain of 28.12%. So step 1 of our playbook is complete. Reddit is consistently outperforming both its sector and the broader market, establishing undeniable relative strength.
Which brings us to Section 4, volume and earnings revisions, confirming the bullish trend. If a stock beats the industry average, your very next step is to confirm that the trend actually has serious institutional backing. We do that by looking at the volume. Over the last 20 days, Reddit has been averaging over 4.7 million shares traded daily, 4,714,019 to be exact.
So why does that matter? Because high volume confirms the bullish price trend. It proves the move isn't just a low-volume fake-out. Average 20-day trading volume is your baseline metric here. When you see a rising stock coupled with above-average trading volume, you're looking at strong buyer conviction. It's a genuinely bullish signal you can trust.
Finally, we check the fundamentals for Step 3. Reddit's consensus earnings estimate actually increased from $4.02 to $4.13 over the past 60 days, complete with 2 upward revisions for the next fiscal year. Those upward earnings revisions are the rock-solid foundation you need to justify the momentum you're seeing on the price chart.
Let's wrap up with Section 5, Momentum Traps and Warnings, Protecting Your Capital.
Any professional trader will tell you, navigating volatile conditions isn't just about finding the winners. It's about knowing exactly how to spot a trap. You absolutely have to contrast a healthy momentum setup with an unsustainable surge. A healthy trend is driven by exactly what we just saw with Reddit: sustained volume, relative industry strength, and fundamental earnings upgrades. An unsustainable surge, though, that's driven by low volume, fleeting geopolitical news, and purely speculative reactions to global headlines.
So what are the glaring warning signs? Watch out for an over-reliance on volatile macro headlines, surges that totally lack that 20-day volume confirmation, and stagnant or negative earnings estimates. A prime example is trading heavily leveraged vehicles, like the ProShares Ultra Bloomberg Crude Oil ETF, or UCO, swinging wildly just based on geopolitical flux in the Strait of Hormuz. That lacks the fundamental backing of a real momentum trade. If the geopolitical news reverses, the trade unwinds in the blink of an eye, and well, that's exactly how capital gets wiped out.
As you sit down to prepare for your next morning scan, I really want you to ask yourself one totally critical question. Are your momentum targets driven by real volume and earnings, or are you just trading today's fleeting headlines? Staying on the right side of that line is the whole secret to the day trader's playbook.